Are you worried about how you're going to handle a sudden financial emergency now that you are living on a fixed income or preparing to do so? It is a terrifying feeling when the water heater breaks or the car needs a major repair and you don't know where the cash is going to come from. You see these modern financial apps advertised all over the internet, apps like Possible Finance, promising fast cash with no credit check, and you wonder, is this the answer to my prayers, or is it a trap that will destroy my hard-earned retirement security? I want you to take a deep breath. Today, we are going to look under the hood of Possible Finance so you can understand exactly what it is, what it costs, and whether it has any place in your financial life. Because when you are in or near retirement, you do not have the luxury of making mistakes with your money. You do not have time to recover from bad financial choices. You must protect what you have with every single ounce of your being. Let's start with what Possible Finance actually is. It is a financial technology app that offers two main things depending on what state you live in: a small installment loan up to $500 or a cash advance product. They market themselves very aggressively as a safe, friendly alternative to predatory payday lenders. They tell you, hey, we don't look at your FICO credit score. We just look at your bank account history and your regular income, like your social security check or your pension. And we give you up to 8 weeks to pay us back in 4 installments, instead of demanding the whole thing on your next payday. They even tell you that they report your on-time payments to the credit bureaus to help you build your credit score. On the surface, that sounds wonderful, doesn't it? It sounds like a compassionate lifeline. But I need you to wake up and look at the cold, hard math, because the math does not lie. How much does this lifeline actually cost you? While they don't call it a traditional interest rate, they charge fees per $100 borrowed, or they charge a high monthly membership fee of $15 just to access the funds. When you translate those fees into an annual percentage rate, the real metric that shows you the true cost of borrowing money, the APR on a Possible Finance loan ranges from 100% to over 260%. Let that sink in. 100 to 260%. Now, is that lower than a traditional storefront payday loan that might charge 400%? Yes, technically it is. But just because a predator bites you with fewer teeth doesn't mean it's your friend. Paying triple-digit interest when you are on a fixed retirement income is a financial emergency in itself. If you borrow $500 to fix a plumbing leak and you have to pay back $600 or $650 over the next 2 months, where is that extra money coming from? It is coming directly out of your grocery budget. It is coming out of your prescription medication money. It is draining the lifeblood of your retirement security. The big question you need to ask yourself is, why are you looking at a microloan app in the first place? The fear driving people toward these apps is the fear of the unknown, the sudden expense that threatens to destabilize everything. But if you do not have $300 or $500 sitting in a liquid savings account for an emergency, you do not have a cash problem, you have a systemic budgeting problem. And using an app like Possible Finance does not fix a budgeting problem. It puts a temporary, incredibly expensive band-aid on a gaping wound, and it almost always leads to a debt spiral where you have to borrow again next month just to make up for the money you paid back this month. So, what is the actionable takeaway here? What do you do if you're facing a financial crunch right now? First, if you currently have a loan with an app like Possible Finance, your absolute #1 priority is to pay it off and delete the app from your phone forever. Do not treat it as a revolving safety net. It is too expensive. Second, if you need emergency cash today, look at the assets and resources you already own before you ever touch a triple-digit interest loan. Do you have a traditional credit card with an interest rate of 15% or 20%? While I never want you carrying a balance on a credit card, paying 18% interest is infinitely better than paying 180% interest. Can you contact the utility company or the medical provider directly and ask for a hardship payment plan? Almost every major hospital and utility company will give you an interest-free or low-interest payment plan if you simply call them, tell them you are a retiree on a fixed income, and ask for help. They would rather get $20 a month from you than nothing at all. Third, you must build your own internal fortress of protection. I want everyone listening to me right now to set up what I call a standalone emergency fund. This is not money mixed in with your everyday checking account. This is a separate savings account at a completely different bank or credit union. I want you to automate a transfer of whatever you can spare, even if it is just $10, $20, or $50 a month from your pension or Social Security, directly into that account. If you need to downsize, if you need to cut out a subscription, if you need to sell items around the house that you no longer use, do it. Your goal is to get at least $1,000 into that account as quickly as possible. When you have your own $1,000 sitting there, safe and secure, you become your own bank. When the car breaks down, you don't look at your phone for an app to save you. You look at your own financial strength. You pay for the repair with your own money, and you don't owe a single penny of interest to anyone. Retirement is meant to be a time of freedom, a time where you are master of your own destiny. True financial freedom does not come from how fast an app can approve you for a $500 loan. True financial freedom comes from having no debt, low expenses, and the security of knowing that you can handle whatever life throws at you because you stand on solid ground. Do not compromise your peace of mind for temporary convenience. Say no to high-cost apps, say yes to protecting your hard-earned money, and take control of your financial future today.